Hi guys, this is Hector. Welcome to a new video of my Forex trading course. In this video I'm gonna be briefly explaining what the setup chart and what the trigger chart actually are and the uses I make of each of them, okay? Firstly, I'm going to begin with the setup chart, and then I'm going to move on to the trigger chart, so you guys hopefully understand the difference between the both of them, okay? Okay, let's begin with the setup chart. The setup chart has, in my opinion, or the way I personally use it, four main uses, okay? Four main reasons to be used. That's trend establishment, then seeking levels of support and resistance, also trying to spot price patterns, and of course also defining what my target areas are going to be for any particular trade should I decide to indeed take a trade. Okay, all right, let's begin for the trend establishment. This means that, well, the setup chart is a time frame where all the moving averages fall or fulfill the conditions we studied on the first chapter of this course. Okay, remember, all of them moving in the same direction, pointing in the same direction, no crossover, meaning that they are more or less parallel to each other, price nowhere near the 100, price harmonically swinging off the dynamic area of support or resistance, etc., etc. You guys know about those conditions already. So my setup chart will be the time frame where all those conditions apply. Okay, I'm not going to be looking for moving average parallelism in the trigger chart or in any other time frame. Wherever they apply, okay, whatever time frame those moving averages are falling in order, basically all the ducks are in line, and therefore we can establish that we are in a trending scenario. That's going to be my setup chart. Okay, also, as I was saying, I use the setup chart in order to find what my main levels of support and resistance are. Okay, let's assume we are considering this downtrend scenario. Perhaps we might be interested in searching for short entries only, of course, since we are in a downtrend. So I would use this 4-hour time frame in order to search what my levels of support and resistance in this trending scenario are. Okay, for that reason, let's assume live price chart was down here, this particular swing, and just as we see price retracing back to the dynamic area of resistance, we're going to be looking for different elements coming together in order to base our entry. Okay, so we begin drawing our different elements of technical analysis. Okay. Firstly, we draw, of course, horizontal levels, right? In this downtrend, we can clearly see that we have a few swing highs and few swing lows, which are going to be my levels of horizontal support and resistance. Also, we would take into consideration round numbers, etc., etc. But I don't want to cluster my chart with too many lines. This is basically a video explaining the theory, so I don't want to make it too complicated. All right, okay, so I've established my levels, my different levels of horizontal support and resistance. In this case, since remember we were looking at this part of the chart, well, this line is definitely too far, right? It's definitely too far from market price, so I'm just gonna ditch it. It's just way too far. Like I say, I'm not interested in this one either, or in this one either. The only one I could possibly be interested in is this one. Okay, but anyway, if price is to reach this level, we will see a very heavy retracement, so, and getting near the 100, so I'm not very sure I want to use that one either. Nonetheless, it's good to have a mental note of where that trend line is, okay, what price level, but like I say, I'm not sure I want to use that confluence of that support level, former support level, now once broken and perhaps working as resistance, I'm not sure I want to use it in order to base my entry. All right, fair enough. Let's see what other elements we have around here. All right, well, we have a trend line here. Let me mark it in blue. Here we are. We have a downtrend line there. Let's draw some Fibonacci's. There we are. So, alright, around this area, I can see that, well, we have around this area, if, as I was saying, let's assume live price was somewhere around there, I can see that I have of course, the dynamic area of resistance in this case, since we're in a downtrend, which is always our main area, our main reference as far as finding confluences of support and resistance. So we have the dynamic area of resistance coming around there. Also, we have the downtrend line, right there, and also we have the 50% Fibonacci retracement. All of them coming together at that area. Okay, so we have three elements of support and resistance in this case, since we're in a downtrend once again, coming together at this price level. Okay, right there, 211.90 actually. 212, because it's a little bit above. Of course, we would also count the round number as another factor. So it's three of them plus the round number, four different elements of resistance coming together within very few pips within the dynamic area of support and resistance. As you guys know, that's the area I like to base my trades from. So yeah, definitely it's an area I like to keep an eye on. Okay, so I make a mental note that the 212.00 area, okay, round number, this one actually I'm gonna mark it in deep green. Okay, deep green right there. That's an area. And now let me remove all my different lines to clean up my chart. So I know that around the 212.00 level, okay, I have a very strong element, different elements of confluence of resistance. Sorry, making a strong confluence of resistance at that level. So that means that should price retrace back to that level, I wanna be looking for a possible short entry if that level holds. Okay, of course, if it breaks through, I'm not gonna be interested anymore. However, if price does hold, okay, if this level of resistance holds the retracement and price begins to turn around, I'm gonna be definitely interested in search for short entries. Okay, so that's another use I make of the 4 hours of the setup chart. In this case, the 4 hours time frame, which is to search for my strongest levels of support and resistance. Good. Fair enough. We've so far determined whether we are in a trending scenario, which we are, and also we've determined what's our strongest level of defense in this downtrend, which we already have. It's the 212.00 in this particular case. This is just an example. Okay, I'm not really. I don't want to comment on this particular trade or not. This is just an example, so you guys understand the theory. Okay. Also in the setup chart, I like to search for price patterns. Okay, perhaps all those patterns that we've studied on the chapter number 2, I think it is. Remember, we were studying triangles, ranges, and flag formations. Okay, those are the main 3 price patterns I like to keep an eye on when it comes to base an entry of a breakout of those congestions area. Okay, in this case, let me try to see if I see any price pattern here. We had a flag formation right there. Okay, you see that flag formation, but that's already gone. Okay, remember that we are only considering, we are assuming that this is current market price. We have some sort of very steep flag here, another flag there. So-ish, not the cleanest of all flag formation, but nonetheless, you get the idea. If I was to find I don't know, let's assume a triangle here, which is not the case. This is, or let's say a range, okay? This is not the case, okay? This is not really a range, but anyway, let's assume for the sake of it, I would like to search for those formations on the setup chart, okay? In my opinion, there is not really much point to search for price formations in non-trending scenarios, and since we determined that the trend is to be established on the setup chart, which in this case is a 4 hours time frame, I will only look to search for price formations on the setup chart, okay, meaning on this 4 hour time frame, okay. So like I say, don't go about trying zooming out into the daily or zooming in into the 15-minute chart or something like that, searching for triangles or ranges or none of that. You want to keep things simple, and you want to search for price patterns in the time frame they are the most significant, which is in the time frame where the trend is actually showing itself, okay? In this case, the 4 hour time frame. So this is a time frame. If there was if there was any price pattern here, either range, triangle, flag formation, this is a time frame you would like to see them, okay? You would like to search for them, okay? And well, finally, price targets. If we are actually to take a trade on this particular setup, okay, on this particular trade, we will establish our possible price targets on this 4 hours time frame as well. Okay, I don't want to get into price targets. Okay, I don't want to get into that subject, since I dedicate a whole chapter to exits and stop losses and price targets, but nonetheless, just keep in mind that if I was to, I don't know, let's assume I entered here, okay, if as price stand around, let's assume, like I said, this is not a real case scenario. It's just to explain the theory of the setup chart and the trigger chart. If I was to take an entry here, I would determine my exit levels as per the setup chart, okay? For example, here we have a previous swing low. Perhaps I would like to exit half of my position as we reach the previous swing low there, okay? And then perhaps let the second half of the trade, exiting half of the lot size out here, and let the second half run for further profits. But like I said, I don't want to get into that. You will study all about my price targeting policies in the appropriate chapter. Okay, so those are the 4 reasons, or the 4 uses I make of the setup chart. Okay, once again, recapping really quickly: trend establishment, the most important of all. All right, once we've determined that we are indeed in a trending scenario, then in that time frame I will search for price patterns, levels of significant support of resistance, especially confluences around the dynamic area of support and resistance, guys. And finally, if I am to take an entry, if I eventually take my entry, I will also define my target areas also off the 4 hours time frame, or whichever time frame is my setup chart. Okay, all right, guys. Now I'm gonna be moving into the trigger chart. For that case, I'm gonna mark a horizontal line right here. So I'm gonna be zooming now. Let me delete all these text boxes up there, and this one I'm gonna be changing it to the trigger chart, since I am now gonna be listing the different uses I make of the trigger chart. Okay, all right, let's zoom into the trigger chart now. Since this is the 4 hours time frame, remember that we are looking into the 4 hours time frame. I like to only zoom in 4 times the time frame I establish as my setup chart. For example, sorry about the confusing wording of this sentence. I'm not very proficient when it comes to speaking English. Anyway, if the 4 hours time frame is my setup chart, then I would zoom 4 times to a shorter time frame in order to establish my trigger chart. In this case, it would be the 1 hour time frame. Okay, that's rather obvious. If the 4 hours time frame is my setup chart, then I'm zooming into the 1 hour time frame for my trigger chart. If let's assume my setup chart was the hourly time frame, then I would zoom into the 15-minute chart. Or if my setup chart was the daily, 4 times, a daily chart divided by 4 should be the 6 hours time frame, since they are 24 hours a day. But since most of the trading platforms, charting platforms, don't offer a 6 hour time frame, I usually zoom into the 4 hours time frame from the daily, right? So if the daily is my setup chart, the 4 hours would be my trigger chart. But anyway, in this case, the 4 hours time frame is my setup chart, so I'm gonna be zooming into the 1 hour time frame. Well, here we are in the trigger chart. By the way, I just cheated. Okay, I paused the video in order to type all these all these text boxes. But anyway, I'm sure you will be able to forgive me. All right. Okay, the trigger chart. So we are now in the 1 hour time frame, which, as I was saying, it's 4 times shorter than the 4 hours time frame. Of course, that's rather obvious, Hector. And in this case, or in any case, actually, I would use the trigger chart in order to search for, or in order to, pinpoint my entry, also pinpoint my stop loss, and also to follow price as the trade unfolds, if I took an entry, of course, as price unfolds in real time, in order to, basically follow my in-trade management, okay? The in-trade management and the stop loss, all that I explain in their own respective chapters. I'm not gonna get into detail on that. I just want you to remember that that's all conducted, or it's based off the 1 hour time frame, in this case in the trigger chart. Okay. So as I was saying, the trigger chart, I use it first of all to pinpoint my entry. This is the swing. Okay, the swing top. Remember, we had our confluence of resistance right above us. Okay, price retraced back to that confluence. The dynamic area of resistance came around there in the setup chart, and from there we were searching for a bounce to the downside. Okay, the resistance area definitely held the price. The retracement price began to curl around, and now we are searching for our entry. Our entry, well, in this case, it came in the shape of a 1, 2, 3 formation. Okay, this being the aspect number 1, this being the aspect number 2, and this being the aspect number 3, with a retracement trendline breakout. Our short entry would have been there, and that would have been our stop loss. But don't worry, guys. You are gonna learn all about 1, 2, 3 formations in actually this video, this chapter that you are now at. Okay. Just to show you what the entry would have been. Okay, we have a 1, 2, 3 formation, trendline breakout. As we make new lows right there, that would have been our short entry, that would have been our stop loss, and well, bang, off it goes to the downside as expected, in the direction of the main trend in the setup chart. Okay, anyway, so that's for the entry and the stop loss. Okay, don't you guys worry, you will learn all about that in their own respective videos, chapters, sorry. Anyway, in-trade management. In-trade management is all about following price in real time, okay, as the chart unfolds, as your trade unfolds, in order to spot possible signals of weakness in your trade, in order to exit out as soon as possible, minimizing your risk, okay, and therefore your potential loss. In this case, we will be following price in the setup chart, trying to spot different signals, like I say, of early weakness, indicating us that price perhaps might not reach our final target, okay, and therefore we may want to exit the position before manually close the position before taking out our final target. Okay, just like I said, in order to minimize risk or a potential loss. All right. In this case, well, I think intraday management is explained on chapter number 6, but very quickly I will explain how we keep on breaking different levels of support in the setup chart. Okay, price keeps on making a lower highs, okay, keeps on breaking levels of support, always in the direction of the trade and in the direction of the trend, which means that, well, so far so good. From an intrade management point of view, the trade is still healthy. Okay, we have not taken out previous levels of previous highs on the setup chart. A price is actually very harmonically swinging up and down, making lower highs and making lower lows. All right, breaking levels of short-term support in the setup chart, and therefore, basically the trade is quite healthy. Okay, it's definitely moving in our direction. There is no need to close the trade so far. Chances are that it will hit our final target as price keeps on breaking levels of support in the trigger chart. All right, that's another use that I Another reason I like to use the trigger chart, recapping a little bit, entries, okay, pinpointing our entries, also stop losses in order to keep them as small as possible, and finally following price in real time as the trade unfolds, in order to, like I say, identify possible areas or possible signals of early weakness. Okay. Alright guys, that's basically all for this video. Like I was saying, it's just so you guys understand the difference between the setup chart and the trigger chart. It's a very easy concept. Basically, you establish the trend in the longer time frame, and then you zoom in into the shorter time frames to manage the trade, to get the entry, to get your stop loss, to follow it in real time, etc., etc. Very easy concept to understand. All right, folks. That's all for this video. As usual, if you have any doubt regarding this concept of setup chart versus trigger chart, don't hesitate to send me an email. I will very gladly answer back all your questions. Okay? Bye.